talk about Sector. We have the founders here. It's one of our portfolio company at New Order. So Sector is a asset management protocol like for users to find the best yield strategy. Um, we have Peter Brad, Flash, and Saga. Welcome. So let's get right into it. Tell us who you are. What has been your background, and how does it lead to DeFi?
Yeah, I can start. My background is in mathematics, CS, and I have some experience doing quantitative trading. So that's kind of natural fit for DeFi, and I've been doing crypto stuff since 2017, working on various projects, and then got deeper into DeFi about 2 years ago. And I'm doing mostly all the smart contract dev, um, infrastructure, some backend dev. So that's me.
I can jump in. Yeah, I'm Saga. I come from a CS background and have been a front end and Web3 developer for the past 5 or so years now.
Hey, this is Peter. I'm the business lead at Sector. Background is in traditional finance, investment banking, covering financial institutions, and I have tech M&A experience at one of the tech monopolies we all know and love. But made the switch to crypto and DeFi about a year ago, and I'm fully onboarded since then.
Awesome. Going to Sector, I noticed that the problem you guys trying to solve is the imbalance between return and value at risk in DeFi. So what does it mean for DeFi investors, and why do you think there's an imbalance?
Yeah, that's the exact risk that we're trying to solve. And we believe there are unseen risks such as smart contract vulnerability and asset defect risk. And this unseen risk leads to this discrepancy between what advertised yield is versus the real yield that a user or investor is getting. So our team classifies about 2.5% of DeFi total value locked as value at risk. And we do this using historical smart contract data. And so if you compare this 2.5% number to just something like lending APYs of 1 to 2%, we see this gap. And so we believe that this risk reward imbalance is one of the key blockers to greater DeFi adoption. And our team sees an opportunity to address both sides of the risk reward problem. So we're developing the risk tools and investment strategies necessary to sustainably grow the ecosystem.
So Sector is created to solve this problem to give user like fairly adjusted risk and return. Can you tell me a bit more how the Sector achieve this?
Yeah, so we do this through our two core products. One is our risk engine, and the second are our structured yield vaults. So the risk engine calculates this value at risk metric across various risks, like I mentioned before, smart contract vulnerability, as well as others. And we calculate this for all our investment strategies. And so an investor can come onto our platform and make investments in our strategies based on their specific yield vaults, excuse me, based on their specific risk profile. So speaking about our yield vaults, our team has back-tested strategies and live strategies with 500,000 in TVL, earning about 15 to 20% APR despite the tough market conditions of last year. The various investment strategies we have are modular and flexible so that we can create essentially aggregated vaults, aka structured investment products that further diversify risk away. So we're providing quality yield through our structured yield vaults and greater risk transparency through the risk engine. And these are our two core products.
I see. That's helpful. Just for users to better understand the overall picture of Sector, how is it different from, let's say, a yield aggregator? Is it because you take into consideration more risk factors?
I can speak to that. So it's um, the biggest difference is that we're able to kind of create these more advanced strategies, and they're all focused on market neutral strategies and market neutral yield. So as opposed to kind of your plain vanilla Uniswap LP yield farming, for example. And we do that in a variety of ways. We do this by um, hedging assets by borrowing them instead of having the user provide them. We do this through rebalancing the portfolio, the strategies to remain market neutral. So we're able to offer these kind of more sophisticated array of strategies, and in addition to that, it's having this risk engine that clearly illustrates the various risk factors. So again, we can't take away the risk, right? The risk is kind of inherent in some of these DeFi strategies, but we can start to look at kind of the relationship between risk and the yield of these strategies, and have kind of empower the user to make an educated decision about how much risk they're willing to take on in exchange for, a certain amount of returns.
Yeah, that makes sense. So speaking of like yield strategies, I'm curious to learn like more in detail, what are some of your like initial investment strategies?
So we started about a year ago. We started running this strategy that's delta neutral um, Uniswap LP farming. So it's providing liquidity to Uniswap, but it's doing it with just just through the one asset. So you're not exposed to, for example, if you're providing LP to an USDC ETH pair, you're only exposed to USDC, and we borrow ETH from a lending protocol. And throughout, as prices move, we rebalance this position to remain market neutral. We also now have a leveraged version of the same strategy, where we able to borrow even extra funds against the LP position itself, and that's done through protocols like Taro and Imprimax. So that allows us to have close to 5x leverage on the same strategy. We have a bunch of different simpler strategies that are just either lending to protocols, or kind of like traditional Avia compound, or lending tokens to bridges as bridge liquidity. So that's just more of like a standard auto compounding lending strategy. And then the newest strategies we've been working on is leveraged convex strategies. So that's Curve LP deposited into convex, but we use the Gearbox protocol to borrow additional capital against this LP position, which allows us again up to 5 or 6x leverage. So those are the main strategies right now.
That's great. Thank you for a detailed answer. And how are those strategies performing?
Yeah, the performance has been very good. So some of the simpler non-leveraged strategies are doing between 6 and 10%, and some of the more some of the more riskier leverage strategies are doing between 10 and 20% APR.
Awesome. That's great. So it sounds to me that the risk engine really is the core tech of sector. So I'm curious to learn, how is VAR being calculated, used as a risk engine?
Sure. So we start by analyzing the risk exposures of each dependency of a given strategy. So like its smart contracts, underlying protocols, and collateral assets. And we compute the value of risk of each of these in the span of 1 year. And then they get summed together so that the final VAR of a strategy is a sum of more than just a traditional value at risk calculation, which would use like historical performance or standard distribution, but also accounts for smart contract vulnerabilities, asset depegs, bridge hacks, and other black swan type events. And then this VAR is what's used by investors to calculate the risk, and by us to organize our risk tiered aggregator vaults.
I see. So there are different like risk tranches for different type of users. So who do you think will be the first users of sector? Is it more retail focused or more institutional, or is it both?
Yeah, so we expect our early users to be mostly crypto native investors who want more transparent risk tools and access to the real yield that those sort of tools unlock.
And just to jump in, our team's been building for the last year, and as we've been addressing this risk reward imbalance and getting market validation for our products, especially on the risk side, we realize we can address this problem on a bigger scale, specifically for the institutions that you mentioned, Amber. I think how we're seeing it is our DeFi products kind of serve as the foundation for our institutional risk tools and investment strategies. And we've already begun conversations with institutions, and we'll be working to learn about their specific investment and risk needs to fully address them as we grow and adjust and scale both the risk engine and our investment strategies.
Awesome. Excited for updates with on the institution side. So I also noticed that you already have some pre-launch partners such as Arbitrum and, as you mentioned, Flash, Gearbox, and Stargate, Synapse, Motherboard. So tell me about those partnerships. What do they entail?
Yeah, these partnerships are all very important, and we're excited to have commitments with them pre-launch. Networks like Arbitrum that you mentioned are important since we're building their ecosystem. We believe in the long-term potential of the network, given the strength of their DeFi community and the innovating projects being built on there. Other partners like Bridges unlock liquidity efficiency and provides us more investment strategy options since it provides more access to different protocols. Things like DAO onboarding tools like Motherboard gives us access to DAO treasury management needs. And because we're developing safer yield generating and delta neutral strategies, these are something they would use in the management of their treasury. And then investment protocols like Flash mentioned, Gearbox, Tarot, they diversify our investment strategies and ultimately just enhance risk-adjusted returns. And to take on the second part of your question, what do these actually look like? So these come in the form of token share and grants because we're routing significant liquidity and volume, as well as community engagement. Our protocol and network partners will be promoting us via their own channels like Medium, Twitter, and they'll also be hosting us for AMAs in their Twitter spaces.
That's very clear. Thank you. So the partnership with Motherboard and Arbitron is more so like go-to-market strategy to tap into different type of users, and for Stargate, Synapses to enable better investment strategy for users. Awesome. So tell me, is there a token design in this product?
So we are building the protocol to be um, decentralized protocol. So of course, the kind of pretty much the only way to do that is through a governance token. So we do plan to launch a governance token in the future. So we're still kind of developing the details of that. We have some other ideas about using the token for kind of the liquidity routing mechanism similar to Curve. So that's all in the works. So stay tuned for more details around that.
And when can users start testing out the product? Is it at the mainnet launch?
Yeah, we'll be
It's going to be
launching
a
our. Sorry, you want to go ahead?
Yeah, we'll be launching on Arbitrum primarily, but we'll have a few other strategies on other chains as well.
I see. So if anyone else is interested to learn more about sector, what's the best way to get in touch with the team?
Yeah, you can reach out on Twitter. We're sector_FI, and you can find our Discord there.
Awesome. So I will be also, linking those informations in the description below. Peter Brad, Saga, Flash Lunar. It's been great. Thank you for joining us and talking about sector. Best of luck to your mainnet launch. Let us know if you need anything from us. New Water is always here to support our portfolio companies. For to our audience, thank you for listening. Don't forget to follow our socials to stay updated with New Water.